Let's welcome in Crocs CEO Andrew Rees. Mr. Rees, welcome. Good to have you back with us.
Thank you, Tyler.
What do you think the market is looking at here? I mean, I guess when you have 67% revenue growth, it's hard to keep that kind of growth up, but you're predicting growth for 2022 and a lot of it.
Yeah, no, sorry. Yeah, look, we had a great year last year. 67% revenue growth, record profitability, 30% EBIT margins, which is the best in the industry. And we feel really confident about the year ahead of us, right? So we've guided the market to 20% plus growth in our core brand Crocs. And then we add on top of that our acquisition of Hey Dude. So we'll see really, really strong growth this year. And we think profitability will be super strong. I think the market's nervous about the short term, right? So we're definitely seeing supply constraints in the first quarter. So the first quarter is a little bit more muted. If you think about those factories that were closed in Vietnam during the back end of last year, those goods would arrive now. Now we're using air freight and all sorts of things to mitigate some of that, but you can't mitigate it all. So I think that's what they're focused on. And I think they're also a little bit nervous about the consumer economy. We're very, very confident about the way the Crocs brand is positioned and the consumer's interest in what we have to offer.
And those mitigation measures also cost money. So they presumably maybe gnaw in a little bit into margins. But let me come back to something that really stood out for me there. You are predicting a better than doubling of revenue to above, is it $6 billion by 2026, 2025?
Correct. And the math there is we think the Crocs brand, which was $2.3 billion last year, by 2026 can be $5 billion. So we can more than double the Crocs brand on a global basis. Now, that growth will come from digital. That growth will come from overseas. That growth will come from our investment in the sandal category. So we're very confident about that. And then we add to that Hey Dude, which we brought last year. So Hey Dude, we will complete that transaction. We'll complete that acquisition here in the coming days in terms of closing it. We think that brand is $1 billion by 2024. So $1 billion plus 5, we've got our $6 billion. So we're super confident about what we're offering to consumers, and and I think investors will see that eventually.
I was talking earlier today to some of the healthcare professionals who give us our COVID tests. They all wear Crocs. They all wear Crocs, and they love the lined Crocs. I didn't know you made lined shoes, number one.
My mom
say they're wonderful.
Them.
What is that?
My mother swears by them.
Swears by them. Why are Crocs shaped the way they are?
Well, that's a long story. So let me hit lined first. So lined, actually, so if you look at the last holiday season, the unlined clog and the lined clog were number 1 and 2 most popular selling shoes in the United States for the holiday season, as recorded by NPD. They're shaped the way they are because of really a couple of things. One, to give easy on and off, to give all-day comfort, and they have holes in them so that they breathe and are ventilated. When the founders originally founded the company, they were looking for an easy on and off, lightweight shoe that floated for boating. Obviously, the applications are far beyond boating today.
Yeah. And now I gather that you have sandals and flip-flops coming or in, actually in the marketplace now, and that you see that as a growth area in addition to your traditional iconic Croc.
Yes, Tyler. Yeah, we have a significant sandal business already. Our sandal business grew 30% last year. We've projected that our sandal business will be 4 times its historic size over the next 5 years. So that's a very, very strong growth category for us. What's appealing about the sandal business is that the overall market is much bigger than the clog market, right? So the clog market, we estimate, is somewhere between $8 and $9 billion. The sandal market is $30+ billion on an annual basis, on a global basis. So we're a bigger market to go at. It's obviously seasonal as well. A lot of people buy sandals for the season and then buy another pair next year. So it's a replenishable market. And we know that our style, our technology that we use to make our shoes, the comfort and the value that we give our consumers resonates really well. And we've been taking share in sandals. We think we can take a lot more share in sandals over the next 5 years.